Hello everyone, welcome back to the channel, your number one source for income-oriented investing. I got the CEO of GraniteShares with me, Will Rind. First time on the channel. Will, thanks so much for doing this a couple of days before Christmas. How are you doing, my friend?
I'm doing very well. Thank you so much for having me. I really appreciate it.
Yeah, so you guys are based out of New York. This is the first time you're on the channel, so just tell the audience and that doesn't know you a little bit about yourself and GraniteShares. Not the whole life story, but super quick, if you don't mind.
Yeah, no, absolutely. So as you said, we're based in New York. We're an ETF issuer, and I started the company 7 years ago. We've been growing sort of fairly rapidly since then. The company is global, so we have a ETF business in Europe where we're active on most of the major markets, and also we have a presence in Asia where we deal with many of the top Asian countries and markets. The company's about 10 billion AUM. We're probably most well known for our range of leveraged ETFs on single stocks. So those of you be familiar with the likes of the 2x NVIDIA ETF, NVDL, or the 2x Tesla ETF, TSLR. And we have a large range within that space. So we're the market leader in leveraged single stocks. And then as per the discussion today, we launched an exciting new range of funds starting with our YieldBOOST family.
Yeah, and that's exactly what I want to talk to you about today. So the first one has launched, so I'll just share my screen in case the audience didn't know yet here. So TSYY, this is the first one in your series of Yield Boost ETFs, which obviously focuses on Tesla. And hopefully you could see, can you see the announcement here on my
Yes,
screen?
I can. Yep.
And you have many, many more to come, let's say, with we no we don't have an official date, but obviously we're starting with the we'll talk about the Tesla one here. So let's just start with, why did you guys decide to launch this line of yield boost ETFs?
So I think that, first of all, income is something that we have been, had in our stable for many, many years. We have a fund called HIPS, HIPS, which is a high income ETF. And we've always wanted to expand the range of income ETFs that we offer. Options-based strategies is something that we've just seen in the market from an industry perspective, getting more and more popular as people look to replace, traditional income streams using the higher income that can be achieved through option strategies. So we thought it was a good time. Our leveraged single stock business is doing super well. So it was a good time to expand what we were offering on the income front. And we felt like we came up with something completely unique, completely differentiated, called Yield Boost. And we've launched the first one.
How do they work? Let's start with that. So obviously we could focus on the Tesla one, which is out already. It's already trading, right? Correct me if I'm wrong. TSYY, I believe, is the symbol.
That's right. So yes, officially launched on Wednesday, 18th of December. And TSYY is the first yield boost fund focusing on selling options, put options in particular on underlying leveraged single stock ETFs on Tesla. So the
Okay.
twist with Yield Boost is that Yield Boost aims to provide options-based income. So just like you would get from other brands and strategies in the market. But what we're trying to do is specifically use options on leveraged ETFs. So it could be leveraged single stock ETFs in the case of TSYY, or as you've just seen with the family, as we broaden this out to sectors and or indices, it will be those as well. So starting with TSYY,
Mm-hmm.
the implied volatility that you have on options on a leveraged ETF is just a lot higher than options on, say, the underlying stock. So if you look at the implied volatility on something like Tesla stock, you'll see somewhere in the region of 70 to 80, depending on obviously any given day. And then the implied volatility on a leveraged ETF linked to Tesla is roughly speaking double that. So there's a lot of implied volatility there, and therefore there's a lot of premium that can be harvested by using those options. And so the strategy aims to harvest that high premium, but by selling options that are slightly out of the money, we're able to cushion the effect or the NAV decay that you can see in some other products by
Okay.
doing that. So there's plenty of implied volatility, plenty of premium available. And so the strategy will sell options that are slightly out of the money that enable us to generate that high level of yield, but have some protection against NAV decay.
Okay, and are you selling call options, put options? It looks like the page said put options. I'm just curious. Typically, the
Yes.
classic method is covered calls or call options where you're limiting your upside, but you're cushioning your downside. So why did you guys decide to do put options, or do you have the ability to do both?
So we decided to do put options
Okay.
for a specific reason that the payoff is identical in terms of that versus a covered call. The issue that you face when you do it with a single stock is that for regulatory reasons, it's not possible to own just the stock and do a covered call. The way that some of the other people in the market that are doing something like that get around it is to create a synthetic position.
Yeah.
And therefore, with Yield Boost, we focus just on selling the put. It's the same payoff, but by selling the put, that enables us to execute the strategy, but within the confines of the 40 Act or the regulatory environment that we exist.
Okay, so just to make sure people are not confused, so just for example, TSYY, would it write options on something like a TSLR, which is also managed by you guys, and but it's just a
Correct.
Tesla 2X or 100% leverage ETF. So would you guys in the yield boost, would you own TSLR and then write options on it? Is that how it works?
No, so the strategy would be to, yes, write options or sell put options on the underlying levered Tesla ETF, such as TSLR or competitor products. So it's actively managed. We don't have to use one. We can use wherever we find the most liquidity.
Okay.
And we sell those options based on the underlying, TSLR or TSLL, other ETFs that are out there. But it's a naked put, so it's just selling the option and receiving the premium.
Oh, okay, I understand that. So what would TSYY actually hold? Would it hold like nothing and you're just writing puts and then when it goes, if those strike prices are met, you're buying the shares? I'm just trying
Yeah,
to figure out
so
the operation. Like what does TSYY
yeah,
actually, what's inside of it? Maybe I could start with that.
sure. So if you receive $100, say investment from the investor, you sell the options on that, and so you receive the premium,
Okay.
and then you hold whatever else is left is part of the margin for that. So it's mainly premium that you're receiving in the form
Okay.
of cash.
Okay. That's pretty interesting. This is very, very unique in quite a few ways because I believe this is the first time that an ETF fund manager is writing options on those leveraged ETFs. And
That's
how
correct.
I know they're hugely popular, especially the MicroStrategy one, Tesla, Nvidia, obviously the indexes as well. I mean, we see that here. I mean, it looks like QQQ one is coming, a SPY one, a small cap, which I'm assuming is the Russell. Then you have sectors. So I'm assuming these are going to be written on also 2x leverage ETFs that correspond to that.
Yeah, or in some cases 3x, depending on the
Wow.
particular
Okay.
exposure. And again, 3x just higher applied volatility than even the 2x.
Okay. And you mentioned that the volatility is essentially double the stock. So the option premiums must be insanely high. So
That's right.
is that what's giving you the ability to go more out of the money?
Exactly right.
And okay, and that's why you said there should be less NAV decay because we're going further out.
That's right. So if the benefit to these strategies is clearly that they produce or can produce a lot of income or a lot of yield, the criticism can be that there's no protection against the downside, and
Right.
therefore you see quite a lot of NAV decay. So the way to try and address that is by selling options that are slightly out of the money and therefore you have some protection against that NAV decay or the downside. You have a buffer in there.
Okay. And I know, and tell me a little bit about the options market on these leverage ETFs. I'm sure they've grown over time. Do you feel confident that there would be enough options liquidity to do it on these leverage ETFs? Or do you guys actually have the ability, let's stick with Tesla, to also write options on Tesla just in case? Or you think you're confident they have enough options liquidity, we're going just with the leveraged
Yeah,
ETF?
so that's why, Adriana, we picked the specific ones that you see, like specific exposures, because liquidity is a key part of any strategy in the ETF world. And so if you look at the sectors that have been chosen, the reason why they've been chosen is specifically because the options markets are very liquid on those, and therefore that makes the strategy viable. So we couldn't do or we couldn't do a strategy where we were selling options on something that was a liquid. So there has to be that liquidity there. And obviously with strategies like this, hopefully that liquidity will just be enhanced. But the starting point is we're doing it on liquid underlyings.
Okay. Okay. And would you say, in terms of risk, so with these compared to the 2x leverage ETFs, would it be like a covered call where you're writing options, so it would be lower risk than just owning, for example, the Tesla 2x leverage? In terms of risk level, what would you say?
Well, certainly they're lower risk in the sense that the yield boost products are not leveraged ETFs. It's just that the way that they're achieving their income or the way that they generate their yield is by selling options on levered ETFs.
Okay.
But the actual yield boost funds themselves are not leveraged. They're just taking advantage of the implied volatility that exists in the options on leveraged ETFs. So they're certainly less risky than a leveraged ETF because it's a buy and hold. In other words, you're just holding the ETF and using those options to generate income. However, they're not without risk,
Right.
just like any strategy in the market. And because there's higher implied volatility, there are higher volatility with leveraged ETFs, then you do have the risk clearly of those funds moving around in price quite a bit and therefore affecting the value of the options and or the strategy.
Interesting, interesting. So I know it's still early to tell, but what kind of yields are we looking at here? Is it, and I've seen on your site, it's going to be monthly distributions, monthly payouts.
Yeah.
So can you give us an idea of what kind of yield? Obviously, a yield on the Tesla one is going to have more yield than the SPY one or the QQQ one.
Yep.
But for example, like the Tesla one, what yield would you expect annual? Are we talking like 15 or are we talking more like 50?
I think we're probably more talking the latter. It's difficult for us to give kind of an estimation because, of course, that's so much linked to the implied volatility
Right.
in the market at the time and obviously going forward. But clearly, intention would be for us to provide a yield that is similar or higher than some of the competitors, but like I said, with less NAV decay because of the way that the structure's set up.
Interesting. Are you covering 100% of the portfolio? Like a yield max, for example, they cover 100%. I'm assuming it would be 100% as well here.
When you say cover, what do you mean
Like the
specifically?
percentage of the portfolio that you're writing options on. Some managers will do like, will only cover 50% and let the other 50% grow organically if Tesla, goes
I
up. But
see.
it's not
Yes.
really that, this is a bit different. So maybe the
Yeah.
question doesn't really apply that much. And I apologize because I'm not a super options like expert.
No, no, no.
But
But yes, it would be the 100% coverage.
okay. And weekly calls, monthly calls, how much out of the money? Let's get into sorry,
Yeah.
puts. Let's get into the details of the moneyness and the frequency. So is it an active approach or would you say it's more of a passive approach where, okay, we're going to write like weekly calls at this amount out of the puts
It's
rather
definitely active. Yeah,
active?
so
Okay.
definitely active. And that gives us the flexibility, like I said, to choose the different options contracts available, ones that have more liquidity or whatever suits us best. But the idea is to do rolling weeklies. So
Okay.
to sell weekly puts, that's the flex options, more specifically, and to roll those weekly options, and that will be how we generate those high yields.
I have to say, this is pretty interesting. I'm pretty excited to see what kind of yields and monthly distributions are going to come out of these. I'm sure they're going to be very, very high, very, very competitive.
I think I inhaled a bit of dust or something.
It's okay. I'll cut it off.
You want to ask me that question again
Yeah. So
about who it's for?
yeah. So all right. So final question, maybe for what kind of investor are these products designed for? Would you say?
Yeah, so the kind of investor would be somebody who's looking for a high level of income, specifically somebody who has a high conviction in, receiving large amounts of yield, but I think somebody who is also bullish on Tesla or specifically Tesla levered ETFs going forward. So these are products that are buy and hold, they're income-based strategies. And I think anybody that is in the sort of the covered call options game or the put writing options ETF game is familiar, broadly speaking, with how these products go. It's just a question of, how important is yield or income for your portfolio. So I think this is interesting in terms of adding, a high income component to a diversified portfolio.
Super interesting. Super interesting. So the management fee is 99 basis points. MER is 1.07 for the Tesla one. Do you expect them to be the same for the other ones, or would they slightly different, or all the management fees going to be 99
I think
basis
they'll all
points?
be they'll all be the same. And typically, it's like our levered single stock offering, where I know that we have now so effectively some funds that are a little bit different, but for the most part, it's all the same. The only reason why the fee would be different is, if we're offering a asset class where we're expected to generate limited amounts of AUM, but it's something that people want. But I think in this case, we expect them to all be the same.
Okay. Awesome. And I'm thinking of maybe YieldMax. They do have an all-in-one universe of funds product. Is that something that you were thinking of maybe for Yield Boost? Because the list is pretty long. You got about, 20, 25 of them, including some indexes. Would you ever just put them all in one wrapper and do an equal weight? Something like that?
Yeah, I mean, maybe not them all, but I think it's a good idea to have a selection, and maybe it's an
Yeah.
actively managed strategy where we can sort of select the ones that have the highest yield or highest conviction in terms of the sectors. I mean, clearly Tesla's done really well since the election was announced, and therefore I think that Tesla is going to be one of the biggest beneficiaries of the Trump administration over the next 4 years. So we're naturally bullish on the company anyway. It's something on the leverage single stock side. We've seen a lot of interest in TSLR. So I think that there's a cause for having conviction around certain stocks and then certain indices or sectors as well.
Okay. I think for what it's worth, I think it's a super idea. My community especially loves, getting one wrapper so they could
Yeah.
really buy and hold, let it drip or whatever, and just never have to worry about it. So what it's worth, I would highly recommend it. I hope that one comes out soon once,
No, it's a
all
great
the
it's a great idea, and there's obviously good diversification benefits as well from a long-term investing perspective that you get when you just
yeah.
blend the different asset classes together. But I think, we want to see clearly how Yield Boost takes off, and then obviously be able to sequence other products.
Okay, sounds good. Well, Will, that's it for now. I'm sure I'm gonna have you back to discuss the future launches and other things Granite are doing. So thanks so much for your time. I really appreciate it, and hope
Yeah,
to see
thank
you
you
again
so
soon.
much. Great to talk to you.
Yeah, same here. Take care.
Take care. Bye.